Hey friends, it's Tony with Lindcraft and Tea. I hope you're doing wonderful today. So, as I typically do, I was speaking with some friends the other night and they asked me a question about real estate. They said, Tony, you mentioned the market is shifting, the market is normalizing, the market is rebalancing. Help us understand what you're talking about, Tony. That was a great question, so I thought I would share with everyone as well. So, markets are always seeking equilibrium. And markets are driven by supply and demand, okay? And then the more supply there is, the lower the price. If demand is equal or drops, the higher the demand, the higher the price. Obviously, if supply remains the same. So thinking it through, when an agent like me mentions that a market is shifting, what we're talking about is the balance, the pendulum, the seesaw, if you will, of leverage in a negotiation to get a home under contract. So in our market, as example, the market is definitely shifting. By shifting, I mean there's more homes in inventory than there has been historically, but that's off an extremely low base. By shifting, I mean buyers' sentiment is changing slightly and buyers are becoming a little more patient in what they're looking for. By shifting, I mean there's a plateauing to a degree, at least in the moment, of pricing. And part of the reason for that is when homes are listed, sellers or listing agents try and advance pricing based on homes under contract, which they don't actually know the contract price, or homes that have recently sold. And we often apply the rule of substitution to give us some ideas of if we have this pool of capital and we can buy a house in this neighborhood or a house two neighborhoods over, how does the different dynamic look? So what to expect in a shifting market? And I'll speak to the triangle market directly, but if you have a need in your market, reach out to me because we work with wonderful agents, very knowledgeable throughout the country. So when the market is shifting, you first need to understand who still has the leverage. And right now in the triangle market, there are more buyers than there are homes to be purchased. But as you've heard me say before, nobody lists a home for sport. They're usually selling their home because they have something in life they need to move on to. Therefore, they are a motivated party by definition. So as I speak about the shifting market in Raleigh, and I talk about an increase in home inventory, and I talk about a change in buyer sentiment, what I'm speaking to is that buyers are being a little more patient, a little more thoughtful. They're taking more time. The transaction volume or the pace at which homes sell is slowing a little bit. Now, is any of that negative? Is any of that indicative of price deflation? No, not at all. What that is to be expected. It's something that I anticipated happening. It's something that needs to happen for a market to remain healthy. As the market shifts and as the equilibrium starts to even out between buyers and sellers, which would be a normal or normalized market, what you will see is a higher percentage of homes that will sell at or just below list price, as opposed to what you saw in the first few months of this year and all of last year, which is homes selling at or above list price. The average sold price to list price last year was 104% in our MLS, but there are plenty of homes that sold much higher. And the reason for that was demand and supply were not in balance. Demand far outstripped supply to the degree it was insanely low inventory, very difficult for buyers, and also very hard for sellers and listing agents to appropriately market the property and pick the right list price. And remember, when a seller or a listing agent sets a list price, that's the first negotiation, okay? In a rising market, in a strong seller's market, you can expect that house to sell at or above list price. And in my experience, if it's listed correctly, it will usually sell between 100 and 111% of that list price. In a balanced market, you will see a higher percentage of homes sell at list price, and you will see some increase in price adjustment because one of the things you do as a listing agent with the seller's consent is you test the market depending on the situations and the motivations for sale. And obviously you never pick a price that you don't think is reasonable, but you would always err on the high side if possible. And then in a buyer's market where there are more sellers than buyers, and again, that's not the market in the triangle, has not been that way for 2.5, 3, possibly 4 years. When you look at that situation, you'll see far more homes sell below list price. You'll also see a series of price reductions on occasion with homes. And, that's a market that's very difficult for sellers and for listing agents. If I could, I'll share a little more thought with you because we've been hearing an awful lot about the R word, the recession. Recessions are not fun. A recession is defined as 2 consecutive quarters of negative GDP growth. Okay, what does that mean? Well, with respect to real estate, if you look back at the last 6 recessions that occurred since 1980, 2 of the 6 had price declines in real estate. 4 had price growth in real estate. Check one of my prior posts to see those numbers. But of those 2 that had price declines, one was de minimis, 1.9%. The other one, which is the one that we all think about, was caused by a housing bubble, and that price decline was upwards of 20%. But let me share some more information with you if I could. So I moved to the Raleigh, North Carolina market in 2010. And in 2010, we were in a recession, and most of us didn't realize we were coming out of the recession, but we were, but it didn't feel very comfortable. It was hard to get loans, and it was very hard for sellers to sell property. I actually purchased a home in Raleigh in 2010. And when you go back to 2010, the total transaction volume for the year was $5.8 billion. And there was over 23,000 transactions by memory. And I'm going to check my numbers on that real quick just to make sure I am accurate because I don't want to give you any bad intel. 27,000 to be exact. 5.8 billion, 27,000. Here's the other thing to keep in mind. The average list price in 2010 was 220,000. The average sold price was 212,000. So that means the homes sold on average below list price. Okay, that actually was a strong buyer's market, a very difficult seller's market. Let's talk about where we are right now and what is a transitioning market or a shifting market or a rebalancing market or a normalizing market. And again, markets are always a point in time. Remember, markets seek equilibrium, okay? Year to date, 2022, in the triangle market, the total transaction volume is 10.5 billion in less than 6 months. Total transaction count, 25,000 plus in 6 months. In the average sold price, 413,000 with an average list price of 397,000. So we are still in a positive market where homes on average are achieving prices above list price, but that number has come down fairly noticeably. We also have had price growth. But when you think about a shifting market and you're thinking about the triangle market, what you're seeing is a more normalized, a more healthy, a more rational market. You are not seeing price declines. You're not seeing value declines. And that's what I mean by price declines. You certainly will see negotiated or asking price adjustments and changes. That's very different from value change or the very bad D word, deflation, okay? Not occurring. I hope that's helpful. I know it's a lot of technical stuff. You don't need to know it all. You just need to work with a really experienced real estate agent anytime you're thinking about buying, building, or selling a home. If you're thinking about doing that in the triangle market of North Carolina, of course, think Fink at Linda Crafton Team. Give me a call at 919-986-4146. Let me go over that again. 919-986-4146. It's my pleasure to do a consultation with you. They're always free and they're always confidential. It's my pleasure to assist. I hope you have a wonderful day. And remember, a bouncing market is not a teetering market. Have a great day and thank you for watching.